Welcome to another video, and today I'm going to be explaining for you the three major type of order block and what they are, how to use them to trade and catch good risk to reward like this. As you can see, this is 36% trade, 36 RR. I'm going to do the trade breakdown immediately after the video, so let's jump into it. Alright, order blocks with entry types by the wise trader. Order block is a bullish or bearish candle at or near supply or demand zone before they move up or down respectively. The down candle is a bearish candle and the up candle is a bullish candle. Bullish order block is the last down candle at or near or demand zone before they move up, and bearish order block is the last up candle at or near a demand zone before they move down. This is what a bullish order block look like. So in an uptrend, when the market is making higher highs, the last candle before a push up to make a new high is the bullish order block. In an uptrend, you look for bullish order block. In a downtrend, you look for bearish order block. So in an uptrend now, this was the last candle before the market made a new high here. So this is the last candle, and this is what the bullish order block. While here the market was making lower lows, and this was the last up candle before what made a new low here. So this is what the bearish order block, this last up candle, while this last down candle is the bullish order block. So there are four main types of order block: the standard order block, engulf order block, rejection block, and order breaker block. But today I will be explaining just the two main types that you need to be profitable. The standard order block in a downtrend is the last up candle before the move down. In summary, is the manipulation before the move down, and it's vice versa for the uptrend. So this is what it looks like. So in a downtrend, this is why you need to understand market structure. When the market is making lower lows and lower highs, that's a downtrend. Is the last up candle before the move down. In summary, is the manipulation before the down move. So this is the last up candle before the move down, before the strong push down, and overall the market was a downtrend. We'll jump into the chart very soon, but let me just explain this in the slide. So how to draw it? You draw it from the what? From the low to the high of the body. When the candle is big, when it has big body, you draw it from the low to the high, your order block. But when it's a very small candle, like maybe this one, you draw it like from the wick to the wick. So entry type for this, there are two types of entry. So type 1 entry is the entry from the wick. In this example, we entered at the low of the wick with the stop loss at the high of the wick. So you can see here, this is the candle. After we identify our order block, we put the entry at the low. This is the safest entry actually. I will put stop loss at the high of the wick, and as you can see, we get a very low risk to reward with this sort of entry, 1 to 1.7, which is extremely low. I don't trade this type of style, but just explaining it in theory. This is how weak entry looks like, and you can see this candle is very big, so we can just use the body if you want to enter. So this is the body entry in this second type, and this is the second type of entry. In this example, we entered at the low of the body with the stop loss at the high of the body, and you can see you got a very high risk reward here. Not so high, but okay. With this kind of entry, it's more risky actually. It's more risky. Price has high probability of hitting your stop loss or taking your out before making a move, so just be very careful with it. The other entry type, the weak entry, is more conservative, as you can see, but have lower risk to reward, and this is more risky with higher risk to reward, so you just know what you do. So the second type of order block is the engulf order block. It's the last candle that gets engulfed. It doesn't matter if it's an up candle or down candle, the candle must be engulfed. Remember, you have to keep the trend. You have to keep the trend in mind. If it's a bullish order block, it has to be close to the last down candle, at least close to it, like the next candle after the last down candle. If it's a bearish order block, it has to be close to the last up candle. That's the last up candle before the down move. So this is what the engulf order blocks look like. Here's an example. It is the last candle that gets engulfed. You might miss entry with this, but it will give you a lot of refined entry than the standard order block, which is correct. So this is the last candle that got engulfed here. As you can see, this blue one here, it's not a bullish candle, it's a bearish candle. As you can see, it's a down candle, but it was the candle that got engulfed the bulk of price, volume of price, took out the low of it. Here, this blue candle did not take out this low. This bearish candle did not take out this bullish candle here. So this is the engulf order block, and this can help you get very high risk to reward trades when you use them properly. So for entry, as you can see, you use the body to body, which is your type 2 entry, or wick to wick, which is type 1 entry. When the candle is small, you use the wicks, and when the body is large, you use the what? Body. Alright. So as you can see, you can use both type of entries for the refined zone. You get high risk to reward with body entries, but it's more risky and price more likely to hit your stop loss. So in conclusion, forex is a very volatile market. One should not invest any amount you cannot afford to lose. Therefore, use proper risk management. You will get many false order blocks. Therefore, you need to backtest and forward test this in order to know which one is valid. This is correct. You get many false order blocks. I'm making a video showcase you which order block is valid and which is not valid very soon. But this is just the basics of order block. Order block, as you can see, it's a very short video. So let's go back to the chart and let me break down trade I took. Alright, so I'm going to be deleting everything now, and I'm going to show you what I saw to pick my order block and everything you need to know. I'm going to run a quick full top-down analysis of this trade I took. Yeah, I'm going to analyze this trade I took right now for you. Alright, so you can clearly see that the market was in a downtrend. We're making lower lows and lower highs. So let's go over to the daily. On the daily time frame, you can see it's a bearish market because we're breaking structure to the downside. So go over to the H4 for your zones. I made a video initially on supply and demand zones, how to pick them. Make sure you check out that video. Alright, so on the 4 hour, we're watching what supply chain holding. So you can see what a break of structure here, a break in market structure here, and this is what the order block. You can see the body is very big, so you pick from body to body. You can see how price came back to the zone and dropped again and broke the structure, made a new low. So let's just label this quickly. And the market made a new low here to give you another lower low. And this is another lower high. So after the market pushed up here, after taking out this low, the market rallied up and created a base on the lot and dropped. So after the market did that, the last bullish candle or engulfed candle, depending on whichever you used to trade, this one will keep us our zone. So this was the candle. It's a very big candle, so use it from the body to body, from the open to the close of the body. You can see that did not get mitigated because the market is in very strong downtrend. So wait for price to do its thing. So price came and did break structure again, creating another lower high, and another lower low. So after price broke structure, here was the last point, the highest point. So you can see price did price rallied up, created another base and dropped. So the highest point is this, and this is the last candle. This candle, the body is also big, so pick from body to body, and you can see how price nicely mitigated this zone and dropped. Alright, so let's go over the entries. If you wanted to enter, type 1 entry will say from week to week. So you'll be entering from here, enter the week to the stop loss at this point. So you'll be entering here, you stop loss at the high and take profit at the low here, which give you a low risk to reward. But if you're using the body to body entry, which is the type 2, it will be here and stop loss at this high, which give you high risk to reward, but very risky. Alright, so after price mitigated this block, this was where I came into the market and I saw this, and price broke structure here again. So price broke structure here and left another order block up here, another bearish order block. So I picked from body to body just as I've explained. And when price came into my zone, I looked to short. So what I did was I dropped into lower time frame for confirmation, like the M15 zone. I drop into lower time frame for confirmation, and proof to show that I took this trade is this. Okay, here's the proof I took the trade here. So this was my big H4 zone, H4 swing high, swing low. I took a scalp up. I'm not going to be breaking down that down now, just I'm going to be breaking down the short. So as you can see, looking for potential shots here. This was the zone. I refined this to 30 minute zone, or M50. As you can see, I kept this high as liquidity. I'm going to make a new video on liquidity, so be sure to click the like button and subscribe to this channel, because I'll be dropping content on that. As you can see, it's live market. It's a live market, the time ticking, and I was waiting for confirmations at this zone. See, yeah, looking for shorts here with this. So this was just a risk entry trade, but actually waited for confirmations. So let me go over that real quick. So this is my big H4 zone, and I don't want to be taking a trade with this whole zone, because I want to get a good risk to reward. So what I did was I refined my zone to this. I refined my zone to this candle here, to this doji candle. Then I dropped over to the 1 minute. When price came into my refined zone here, I dropped over to the 1 minute. I can't get to it on the 1 minute, but here on the 3 minutes, as you can see, when price entered, we had a small change of character here in this whole zone. Call it a change of character. You can call it Wyckoff distribution. We had a distribution schematic here, and now what I caught a trade at this point. So where was my entry? On the 1 minute, this was what it looked like. Price had come up and did this and come up again and broken structure. You can see price took this low. Yeah, so I picked this as my order block, and I look to short from here. So I placed, it was about a 3 pips stop loss in total. I think it was a bit higher. It was a 3 pips stop loss. Okay, I'll make a new video on how to enter confirmation entries on trade, so make sure you subscribe to this channel. So my first target was this. This was my first target because price had broken structure here. We might continue our bullish move from this point, so I targeted this zone. So I took out 30% at this level, and I left the rest. So price eventually came down to take out the H4 low, which I held. I think it was about 2 days. I held this trade till we took out this equal lows here. You can see how price is generating liquidity. You can see how price is generating liquidity here. This equal lows here. The price comes to cut, so I collapsed the position here. As you can see, 34 risk to reward trade. Awesome trade. Alright, so that's it about order block. Make sure you subscribe to the channel, click the notification bell so you'll be notified anytime I release a new video. And with that being said, see you in the next one.